Welcome to the next panel, talking about funding of maritime startups. My name is Lars Riisberg. I'm from RINA Digital Solutions. I'm heading the business unit inside of RINA, developing, selling, implementing solutions for the maritime industry. I worked in that part for 30 plus years. You can't see that, but it's for real. I'm that old. I'm very pleased to be back in Singapore. It's always nice to be back, and then for such an important event. Beside me, I have really a fabulous panel. As you heard, there's been some few exchanges in the last minute, but I'm sure the ones we have are really brilliant. You might hear from my accent, I'm from Denmark, the cold north, so a pleasure to being in warm Singapore. I will start by giving my panel a chance to give a short introduction, who they are, what company they represent, and also a little bit what kind of funding they are dealing with in this sector. So please, Axel.
Yeah, thank you very much. Axel de Mégille, Stolt Ventures. So we are the corporate venture capital team for the Stolt Nielsen Group. So we are the largest chemical ship owner and operator, 165 vessels. We're also a terminal owner and operator, 14 terminals, and we're also a large operator owner in the tank container space, largest fleet of ISO tanks. On the venture side, we're looking at investing in innovative, sustainable technologies that are directly applicable to one or several of our business units. The idea is to leverage our platform, our skills, our asset base into sourcing, evaluating, and investing in the best technology to increase efficiency and also decrease our carbon footprint. So big decarbonization angle. Thank you.
Fabian?
Yes, thank you, Lars. I'm co-founder of Flagship Founders. We are a Germany-based venture studio. That means that we do not invest in existing startups or companies. We start companies by ourselves. So our job is to talk to the industry, to identify problems, to generate ideas based on these problems, and to start the companies by ourselves. We are doing this now for almost 4 years and have 5 ventures, all pretty early stage live. Some are here. 044 this morning was on the stage already. And we're doing this by partnering with the tech world and the venture capital world on the one hand side and the maritime experts on the other hand side.
Okay, thank you, Fabian. Reece?
Hi, thanks for having me. I'm a last-minute addition here to the panel. Unfortunately, Dritaman and Nir couldn't be here. So thanks for having me. Thanks, Capital Link. Thanks, Lars. I'm a partner at Propeller. We're a US-based venture fund. We invest at the ocean climate nexus. So we're looking for founders who are building the next narwhals, our version of the Silicon Valley unicorn. We think these companies are super interesting. When we say ocean climate nexus, we're talking about companies that are trying to store carbon in the ocean, pull carbon out of the ocean, figure out how to improve aquaculture fisheries, cell-based proteins, et cetera. And then finally, the maritime sector is a big piece of it. We have 2 investments in the maritime sector already we're really excited about, so it's an important piece, an important category for us. We invest pre-seed, seed, Series A. We're a $100 million plus fund, first-time fund, investing globally, and I think that's it for now.
Thanks, Reece. Haymon?
Hello, everyone. I'm Haymon. I'm the investment director at INNOPORT, and INNOPORT is the corporate venture capital arm of the Schulte Group. So Schulte Group is a German shipping group with core businesses in ship owning and ship management, also a portfolio of service companies, most ancillary services to the ship management side of the business. So at INNOPORT, we invest in early stage maritime tech companies, mostly at seed and pre-series A stage. And as a corporate investor, we very much look also for the strategic value to the group, so how the startups can provide value to any of our business units, as well as how we can add value to the startups. We've been operational for 5 years, have a portfolio of 20 companies, and have a global mandate, and also our portfolio is quite spread out between Asia, Europe, the US, and Africa as well. Thank you.
Thanks, Haymon. You, Marina?
Hi, everybody. I am Marina Hadjipateras, and I'm the co-founder and general partner at TMV. We're an early-stage venture capital fund focused on logistics, maritime, and supply chain, among other industries. We invest at pre-seed, seed, and Series A. Check size of about 500,000 to 4 million. Our portfolio is about 65 companies to date, some including Signal, Freightify, among others in the maritime industry. I have a background in maritime shipping before starting TMV in 2017, and we're looking to invest in more maritime companies and innovation within the industry as a whole.
Okay, thanks everyone. First, a little bit warm up. We have seen, at least in Northern Europe, the M&A climate has decreased a little bit when the interest rates has gone up. So is it the same in the funding sector of startups? Is it more difficult to attract money at the moment? And how do you look forward for the coming years? Will it stay that way, or how do you see it if you start maybe in Europe, Fabian?
So I think overall the investment climate, as you said, coming from the interest rates is getting a little bit harder, or was getting a little bit harder, while on the other hand side, we are all here working in the maritime industry, and I think it's one of the topics later. A lot of shipping companies, like for example BSM, are investing in startups, and the shipping industry, as you all know, over the last 2-3 years was doing very, very well. So there is money and capital in the industry to deploy into maritime tech. That is one of our observations, that perhaps there's a little shift from external VCs to industry VCs. All of our ventures are very well financed, and to be honest, we don't have big struggles to do so. What I think about the financing situation in general is that there was a kind of healthy correction, perhaps, especially when you look into B2C, the US-based VCs putting a lot of money in, I don't know, e-scooters, pizza delivery. WeWork is a great example, that there might be some pretty high valuations, and that the correction in this area was perhaps healthy for everyone involved. But perhaps you have a different opinion.
Did you set me up to talk about WeWork? I'm not going to go there. I'll say we feel very lucky in that we just, we raised a fresh fund between 2022 and 23 and oversubscribed that fund. And last year we were one of the most active investors in climate tech VC, because we saw it as an opportunity to invest when everyone else was pulling back. So from an investor standpoint, we said, this is fine, this is great. There were a lot of startups that were looking for funding, and it was a great opportunity for us. I think we're starting to see people come back a little bit. Deal activity has gotten a little quicker, deals are closing a little faster, and so I won't say that's specific to maritime, but more broadly, it feels as if things are starting to move a little bit. People see interest rates might get cut in America soon. They're all kind of waiting every new report, and so I think the activity will start to come back a bit.
Okay, thank you.
Yeah, but if we talk more specific to maritime, it's I would say funding has reduced, although capital is there in the market. We have more VCs, we have more CVCs now looking specifically at the maritime space. But when we look at maritime startups and their funding, we see a lot of bridge rounds being raised and challenge from startups moving into scale-ups. So the later rounds have more challenges being raised. Early stage, there's still a lot of deployment. And this might also be due to the fact that, when we started investing 5 years ago as a CVC, there were not that many early stage maritime investors. And so now we see the first batch of startups now coming to the point where they should sort of move towards the scale-up stage. And investors have realized that it's taking much longer than expected, and then in some of the obviously B2C and also other B2B spaces. So that I think makes it rather challenging.
Yeah, and to your point, the traction required to raise that next round is, the bar is higher, right? No one's clearing that next round without actually having some real traction.
Yeah, I think it's also inherent to the maritime space. We had seen over the past 2-3 years a lot of generalist VC funds trying to venture into the space with their pockets full of money and trying to to replicate business models that they've done in the sort of like marketplace SaaS software space in the maritime space, and they quickly discovered that the maritime space doesn't really react the same. It's not the same size as a sort of like consumer space, and so we've seen all these generalist investors kind of like withdrawing a bit from the space and making space for all the specialist investors, maritime focused, and including a lot of the CVCs that have taken a lot of space in the rounds as well.
Okay, thank you. All day long, we have heard about decarbonization. It always ends up like the hot topic of all panels. We have also heard that some of the solution is digital transformation, AI, generative AI is the talk of town in technology. When you look into investing in startups, are these areas that plays a high role in your selection of startups today? Marina?
Certainly, I'd say it's one of the largest topics that we're looking at when we are looking at maritime startups, decarbonization and sustainability as a whole, I think, and different ways in which you can convince crews to act in a way which is more sustainable, which is what one of our companies, Signal, does, or carbon capturing altogether on board ships. It's an incredibly relevant topic, of course. Regulations are getting into place, and I think that the connectivity between ship owners and the regulations and the startups that are coming out is happening, and then the funding going into those startups. It's just understanding which ones that you really want to put your funding behind, I think. I mean, I know, Reece, for example, you've been looking specifically, your fund is focused in this area, and I'm curious, just coming from like both US VCs,
Yeah.
It's very much a topic on our radar, as much as optimization and everything else, but.
Yeah, for sure. We also, as a fund, we have a orientation towards ocean sciences. So we have partnerships with 5 of the best ocean science institutions in America, including Woods Hole Oceanographic Institution, Scripps Institution of Oceanography, et cetera. We think that's really important as you talk about decarbonization or any potential onboard carbon capture and sequestration, because when you're dealing with the ocean, it's an open system, right? So you need people who know and understand the marine geochemistry, understand the ecological effects, biological effects, et cetera. And so if we can pair that with the knowledge of the industry, and this is where, I'm excited to be on the panel with folks in this space, I look to Marina and Axel, who I've known, Fabian, Haymon, we're just getting to know each other, but being able to pair capital that is excited about that carbon opportunity with the shipping knowledge and industry is really, really exciting. And so that's one of the reasons we came here this week, is to learn from folks like yourselves and understand it. We also, as a fund, have a couple of our LPs are shipping family adjacent, which has helped inform our view of what will or won't work in the industry. What are ship owners willing to adopt? What type of technology are they going to accept via a retrofit or a new build? So it's something we're still learning, but right now, at our stage, in the early stage investment area, we're investing in those founders who we think are developing the technologies that will be adopted, hopefully in the next few ship builds, because that's going to last, 30 years or so. I don't know if that answers your question or not, but
Yeah, no, definitely.
Is it the same for you, Haymon and Axel?
Well, let me maybe move also to the other topics that you mentioned.
Yeah.
Decarbonization is, of course, a very prominent topic.
Yeah.
Everybody's talking about it, and a large part of the conferences are sort of dedicated to that. You mentioned AI. Well, that's a technology. So we are looking at how can you use AI as a tool, but it's not something that you invest in because it's AI. You invest in it because it solves a problem, ideally, right? But with all the sort of funding drawn towards decarbonization and also AI-related startups, there are also a lot of other areas in the shipping industry that have still a lot of potential for innovation and digitalization. We, for example, looking into things related to ship management. There's predictive maintenance and condition-based maintenance, although that has its own challenges in adoption. you have robotics for inspection and cleaning, which is seeing some uptake. But it's a long journey, again, an area with very long sales cycles. And a lot of the topics that we see in optimizing fuel efficiency on the vessels, that is sort of not the retrofits or carbon capture solutions, but rather looking at data-driven solutions, there we sort of coming to a point where we have better connectivity on the vessels, which really support those solutions coming to market. And that's a critical issue. I mean, so far we've been working with VSAT. Now we see a lot of adoption of Starlink combined with 4G, 5G. And that allows us totally different approaches to real-time fleet performance optimization. And that has to play a part also then in the decarbonization strategy of the shipping companies, since only once you actually can have that real-time data exchange, you leverage those solutions that the startups bring to market.
Okay, Axel?
Yeah, well, I would agree with everything that Haymon just highlighted. Just to add a few on decarbonization. I mean, obviously we're looking at decarbonization as an objective for the industry. The good thing is, so the first, fuel efficiency is the main topic in decarbonization. I think the stars are aligned because all the technologies that are been added currently to the fleet are not only increasing fuel efficiency, but also therefore decreasing cost, which makes our discussion aligned with usually investment committee, management, and customers. So that works quite well. On the AI side, I mean, clearly AI has been integrated slowly but steadily in every single step of the value chain on the maritime industry, whether it's route optimization or crew management. And that's something that we are definitely a part of and want to be playing a growing role in it. So but as Haymon just mentioned, AI has to be an enabler and not an end game in itself. On the hot topics we are currently looking at, I think autonomous navigation was something that was talked about earlier today in another panel with Orca, for example. I know like autonomous hull cleaning is a topic that we are currently looking at. We've invested in a sort of like a sustainable marine coating business called GAT, which is part of the integrated solution with a autonomous hull cleaning solution as well, to offer an integrated solution. And yeah, just carbon capture, I think, is something on the decarbonization side that we are talking more and more. It's not quite mature yet, but it's a topic that we are growing a lot of attention to, and we're following it very closely.
Okay. To a little bit more controversial topic, maybe especially in this panel, because we have different types of funding. We have, let's say, neutral funding from funds like Reece and Marina, and we see also in this sector a lot of funding coming from the shipping companies themselves, either by buying small startups, making alliances closely with other companies, or maybe spin-off of their own IT solutions. We see in my country, Zero North sponsored heavily by Maersk. And in some way, it gives those startups a good chance because they get domain knowledge, they get a client already from the beginning, which is nice. But does it create mistrust with the competitors? So when other shipping companies are going to buy those services, do they trust that they have the same favorable position as the owners of the company? Haymon, I can see you're yeah, getting closer to the mic.
It's a very, very interesting question, because we, well, at INNOPORT, we deliberately set up as an entity separate from the group, exactly for those reasons, because our startups don't necessarily get a Schulte Group company as a client directly. So we are first and foremost an investor. Yes, we are backed by the Schulte Group, by the family, but there's no direct link between the entities. At the same time, we do obviously leverage that network behind us to support our startups wherever we can. So when we invest, we help the startups getting access to our internal experts, to our network, potential customers. So we try to help the startups in that way. And the advantage of us working as a CVC is that, yes, we can work or invest in startups where we probably don't see the 10x return, because we potentially can get sort of a secondary return by the startup providing technology to one of our business units. Right? So that, and the market size is limited for some of the solutions out there. When you have a product or a service that you can sell once to a ship, then your market potential is selling to 70,000 ships. Right? So that's very limited, and that's also why it's not sort of on the radar of many generalist VCs, but why we see quite a lot of corporate VCs or VCs like TMV with a link to the shipping industry, investing in those startups.
We'll come a little bit back to that later, Haymon. But Marina, you represent more, let's say, the neutral investor. How do you see that?
I think some of it depends on timing and when the generalist VC will go into and fund a startup, and in the maritime industry, it seems that it's sort of after a CVC has funded or an owner has funded, and then that's sort of been the case in the past. I think now we're looking at startups from an earlier stage even, but a lot of it does depend on timing, and I think if you are more generalist VC with a focus on maritime like us, you need to understand the patience and time it takes to invest in this industry, rather than, in the US they're used to scaling at any cost and sales and growth, and everything happens fast. And so while post-pandemic, I think a lot more people are interested in supply chain and maritime and want to look at it and invest in it, but need to understand the way the industry works, and it's not going to be successful if you invest in a startup that you think can just scale incredibly quickly, because you need to gain trust within the industry and form relationships, and so I know that because I come from the industry, and so as TMV we can be patient capital, even though we're a venture capital fund.
Can I ask you what your fund length is?
Like 10 years.
You're 10 years.
Yeah, yeah, but we can extend it.
There you go. Yeah, the option to extend. I asked that not to show a difference. When we set up our fund, we set it up as a 12-year fund, in part because we wanted to be able to be patient with a lot of the carbon technology that'll take a long time. It's going to also work for us in the maritime investments. But as Marina pointed out, she can extend her fund. Most funds can extend. I don't know what the makeup of the room is here. I got added late, and so I'm still just meeting many of you. But I would say, if you're figuring out how to get access to this opportunity, we like our setup with the family offices and or the folks who have invested in us as a fund, because they get access to everything we see. Whether it's a maritime investment or it's just a good investment opportunity, now you're getting access to a broad portfolio. So from an investment strategy, if you're sitting out there thinking, hey, we want to see this innovation, how do we do this? Do we set up our own CVC? Or you can make an LP investment, and that Marina's probably a good investor to back. There are other funds out here. You'd get access to any of those startups that come through the portfolio. So it's an interesting way to do it, and we've found a lot of value out of our LPs who are in the industry, because they're able to they put technical managers on calls with our founders and grill them and everybody, and so.
Yeah, and I would add that in the end we all work a lot with each other, and I think the best combination of capital for a startup is probably a mix of financial VC and strategic investors. One bring the technical validation and the customer pipeline to the table. The other one bring the sort of more financial validation and valuation and structure of the cap table and everything that comes with that. So we actually work together on. So for example, Marina and I and Haymon have worked together on Signal with you today. We co-invested, and we like to do that. Hopefully we can reproduce that scheme on other ventures.
Perhaps one little addition or explanation, because Lars, at your initial question, you asked if it is a problem if a startup or a company is owned by a maritime company. And here I would say, yes, that is a problem. But when we're talking about corporate venture capital, it's not about owning a company. It's not about owning 60, 70, 80, perhaps even more % of the company. Because here, then, in this cases, I would say this is a problem because of the industry, because of the hard competition in the industry. So we are not a big fan of this so-called company venture building with a high level of dependent companies. But usually the percentage after a CVC investment is single digit usually, and there the impact of the investor is limited usually.
I will say though, in a different industry, I have seen corporate investors say, if they're in, we're out on different deals, and so that does happen, certainly. And that, of course, is limiting then, because if the market is only so big and a giant swath of the market just said, we're not going to do that, we're not going to be a customer, now that means you've limited your upside. And it's on all of us as early stage investors to create, most of the value creation is in the tail end. It's when you're actually, scaling at the very end, 10 years into the company. And so if that market has a cap on it, now all of a sudden you're not talking about a narwhal or unicorn company.
We're very open.
Look, we're all passionate about this one.
We are very openly discussing that with the startups that we invest in very early stage, and if there's a risk of that happening, I wouldn't invest because that limits the potential. I still look for good investment cases. So for me, it wouldn't make sense to invest in any startup where I see, okay, now we have a problem because competitors of any of the other group entities would not join that startup as a customer.
It's very funny, when we started Stolt Ventures a couple of years ago, I started talking to a lot of my peers in the industry because they all had set up a venture team previously, and I went to my management and they're like, oh my God, but you cannot speak to BSM. I mean, like, they're our competitor. And I'm like, well, there are competitors on the corporate side, but in the venture world, there's no competitors. There are only co-investors. And so we work together, and we're trying to move the industry forward. Yeah.
Okay. A little bit on the same note, you mentioned that there's a limited market. There's 70, 80, 100,000 vessels in the world, a little bit how you count them. And all analysis, statistics will tell this will not grow in the next 10 years. Maybe grow 5%, maybe reduce 5%, maybe the vessels will be a little bit bigger, maybe a little bit smaller. So it's a quite limited market, especially when you're from the United States. Still, where I come from, in the digital field, you see people entering the market all the time. So if you talk plant maintenance system, something that has existed for, 30 years, maybe 35 years, when I grew up, when I started in business. Still today, you see maybe 60, 80, 100 different competitors in that field. There's no one that conquers the market. It's not like SAP or Google or Facebook. And in a way, that's attractive for the companies because there's a lot of competition. The prices are always kept low. There's a big variety of solutions, so you can pick and choose. Do you like them red or green? But is there a challenge that when no one is dominating, no one has the resources to really make a jump? Because whether you like Microsoft or Google or not, they make a difference to the world. So how do you see that? And maybe on the same note, why the hell are anyone entering this market that is, after all, limited with so much competition? And still you see, in this old-fashioned plant maintenance, you see new entrants, I would say, if not every month, at least every second month. But first, is it a problem that no one is dominating? Reece, you seem to represent a lot of money. You're looking for unicorns. Why are you in this sector?
Wait, why am I getting picked on for this question? I got set up. I got brought in last minute. Everyone else has notes here. They're all prepared. You're asking why we're investing in maritime?
Yeah.
Broadly?
Yeah, because I know carbon capture can be a big business, of course, and it's outside of maritime as well.
Yeah.
So maybe my focus more on the digital side, and maybe it was a bit unfair to ask you.
We would not enter a space where there's abundant competition and a capped market. I don't think any smart investor would. But on the carbon side, that's a space where we see just a giant problem that's not going away anytime soon. And so we need investment there.
We changed to Marina because you know the market already, and she's still here. Well, you know, is it a problem that no one is dominating after such a long time, or is it a good thing for the?
I think it's still early days in terms of the technology and the embrace. The fact that owners and everyone's embracing this technology now. I mean, even from when we started TMV in 2017 till now, totally different world and different kind of consideration for partnerships to exist. And so I think it's just actually early in terms of, we were talking earlier about who the growth investors are for maritime companies. We're not totally sure yet. There are, I think that actually needs to be addressed, and there should be more. But I think to me it's a little bit early. So yes, there's more. You see a little bit of consolidation. You see some acquisitions taking place beyond like a Series A or B, if we're talking in the VC sense, because the big players who might be interested also are starting to understand this world a bit more, but might not know exactly what to do with it. And early stage, we do, but I think it's just early, to be honest.
Perhaps one comment from my side on your question. We talk to users of software every day, and I don't want to make a question to this round, but I would say 80, 90, perhaps 95% of the users are not happy with existing software in the maritime industry. They say, wow, that's looking like SAP 1992. I don't want to work with this kind of software. And yes, there's competition in some aspects. I don't want to comment on PMS, for example, but I think there's so much room for improvement, and I think Mark O'Neill said it this morning, we just not started the journey, and there's so much room for improvement.
It's also, it's an industry that's not going anywhere. Like, it's one of the most important industries in the world. It's critical. Yeah. It's not a fad. It's not WeWork, it's not like, it's not a social app or whatever. It's just a mission critical industry. And so that's super interesting. And the other piece is just interesting founders are attracted to it, and good founders are going to find a way to navigate a market. I mean, I'm not an investor in Signal, but I know Signal, as an example, has potential crossover into aviation, et cetera. So good founders and good opportunities are going to be technologies that may be beachhead in maritime, but expand into logistics and broader spaces. So they'll create opportunities.
Yeah, no, I agree. A lot of the startups that we see that have significant attraction also work in other verticals. So they use the technology that they developed, not only in maritime, but also beyond. And that is one thing where startups really need to also see how they build a good case, because maritime is very complex to enter as an industry. It's a multi-stakeholder industry. It's very international. People with very different interests. So we see a lot of startups who don't even really know how to bring the software to market, how to market it properly. As an example, we talk about fuel-saving technologies. The issue here is often that somebody needs to invest in the solution. The startup has built a solution. Somebody needs to invest in the solution. Somebody benefits from the solution, and sometimes it's not the same person. And that makes it really challenging, because the fuel is paid for by the charterer, but the owner or the manager is expected to invest in it. So that's already a problem. And then, or another example would be condition-based maintenance is that solution, suddenly you cannot run the part for 10,000 hours, but probably for 12,000 hours. But if you have a third-party ship manager, the technical manager will go by planned maintenance schedules rather than let the machinery run for another 2,000 hours, because the owner pays at 10,000 hours. So those complex problems that you're facing, these are issues that startups need to understand when bringing their solutions to market. And this is also where, obviously, we from the CVC side, we really try to support as well.
Okay, maybe a little bit provocative as well to you, Axel. Do the shipping companies see themselves as so unique that they can't buy, let's say, from the market that already exists? They have to invent something on their own instead of just buying from existing suppliers and thereby support a market that is already existing.
Yeah, there's a big, I suppose, the non-inventor in-house syndrome in all corporate is very present in the maritime sector as well, as you're probably all aware of. It's something that we're working with. There's always two solutions. There's the sort of like the in-house development or the sort of third-party solution to bring in. It's all a matter of like costs versus benefits and how long it's going to take to bring a product to market versus bringing a product that is already fully developed on the site and not owning it. We mitigate that by getting the CVC on board and trying to see whether we can take some strategic position in third-party solutions that we bring in. But it's something that we work with in order to accelerate the transition towards digitalization and decarbonization. So we have to work with it around it.
Okay. Maybe we are reaching the end. So one of the final topics is. I guess people are not just looking for money, that's one thing to finance, but also maybe advice. We are talking about startups. So typical startup come with a technological idea, and they are typical engineers or technical people, and not so commercially oriented, not strategic, not strong in organization. So you as investors, are you willing also to help them with that part of the equation? How about you, Marina?
Definitely. At the earliest stage, we really consider it a partnership when we invest in a company. We call it the first few years of vulnerability, when it's either just two founders or the executive team and a small team looking at hiring, doing sales themselves, building out partnerships, and we want to offer any of our services or advice, or we sort of have this go-to-market team that with TMV that can help founders with hiring, that can help with deck for actually the next round of financing. We have relationships with other VCs to make connections for that next round of financing. Of course, like shipping-wise, we've got lots of connections, and we always want to leverage those connections when possible, and that's a huge part of why we invest in maritime. Through my background from before starting TMV, I can make those connections straight away. So we consider it like a full partnership, and then I'd say for generalist VCs too, I think that they're just learning that they call shipping the invisible industry in many ways, but since post-pandemic, I think that they're understanding that they too can partner and help help a company go global or enter the U.S. market a little bit more so. So we do, and then we encourage the next round of financing or the next VC that goes in to help in that way too, because founders are wearing a million different hats at that stage.
How about you, Fabian? I know you're very close to the companies you invest in.
First of all, if any of you would like to invest without strategic approach, feel free to call me. Our role as a venture studio or company builder is actually the operational support from day one or day zero, even before the company starts. We invest a lot of time and resources in our startups. So for us, it's not a question. We support a lot, and I think the panel here today, we are all close to the maritime industry. We are all here because we have a kind of unique proposition into this industry, and perhaps you should then ask a kind of very general VC who says, okay, I do maritime next to automotive, next to aviation or so. But I think everybody today here is willing to support on an operational basis, and I think that is, especially in the very early stages, super, super important.
Yeah. I think on the CVC side, I mean, it's clear that it's our DNA to be more than just a silent investor. We're here to really support all the business that we invest in, not only from a technical point of view, but from a sort of like customer introduction, sales pipeline, deploying the technology on our different platforms, promoting them, For example, when we invested in GIT about a year ago, we invested on the back of successful pilots that we did on our Propeller, and then on the back of that, we also did a press release for the investment and the pilot, and that generated a lot of inbound inquiries in the sales pipeline. So, that's sort of the best support you can give to a startup you invest in. We try to replicate that on all our portfolio companies.
I'll just say,
I'm afraid the time is running up, so just a final question.
All right.
Will the startups, will they be part of the solution be discussed all day long? Will they be the salvation of our planet? Yes or no?
I think it shouldn't be the salvation of the planet. I think the startups are just they are a mean, not an end goal, and they are here to help us achieve our common goal, which is net zero by 2050, I suppose.
Good. That was a good final comment, Axel. So thanks a lot to the panel. It has been a pleasure being with you today. I hope also the audience enjoyed it.
Thank you.